We know the president wants lower rates. Have you ever seen this polarity that we've got right now?
Well, I think it's a reflection of, the uncertainty I think we have about the current economic environment and what's happening when you have growth as strong as it is. I mean, we're working on, economic models over the last, 50, 100 years, which tell us if you have unemployment below 4% and wages rising, you should also see inflation rising in the economy. We're above trend growth. We've been above trend for quite a long time. In contrast, we're actually having inflation falling. So we don't quite know what to do with that. And there's clearly a lot of different interpretations of what it means and what the implications are for policy.
Is this a technology overlay? I mean, take productivity, capital, labor, and Solo and the rest, their total factor analysis. I mean, is this just technology overlay in the system and we don't know what to do with it?
I think fundamentally that's a big part of what's going on. I mean, if you think about an economy, that's growing at 3.2%, historically you would say, at that type of growth rate, we're just not going to have enough drivers. We're not going to have enough automobiles. We're going to have too much demand relative to the capacity of the economy to supply that, and so prices are going to go up. But what we have instead is with Uber and sharing apps and so on, we're able to utilize the assets in the economy much more efficiently, get further growth without the increase in inflation. And I think it's that paradigm shift that we're undergoing right now and that we need to really think very deeply about.
Dan, where do you see dollar going from here, and how does that how does it underpin actually your investment strategy? Well,
I think it's a very good point because what you see now on one hand in terms of monetary policy globally for the major central banks, nothing's going to happen. Interest rates are flat; they may be going down. So you're not going to see much of an interest rate differential driving currency. So it's going to come down to growth, and what we're seeing this quarter: U.S. at 3.2, Europe, not point who knows how much, but there's not a one handle on that. I think that growth differential is going to continue to benefit the dollar.